Hi, how are you? Good evening. The Pivot Trade, the only channel that teaches you for free how to benefit from trap traders and be successful and profitable traders. So, this is the price action analysis of the 17th of May 2022 and a huge rally today in Nifty. Let's measure the rally. This is the low of the day, and you could see that this is the high. So, that's about 380 points, which is a massive rally in Nifty. And we can see that Nifty has been making crazy moves. There were days when even 100 point or 150 point move in Nifty used to be a lot, but these days Nifty moves like 250, 300, 350 points, just like that. That used to be the kind of movement that Bank Nifty used to give, but Bank Nifty nowadays easily moves more than 1,000 points. Okay, now in the early part of the day, I had tweeted that Nifty does look bullish today, and the CPR is also very narrow, and the price action is also continuously retesting the supply zone. And I had also tweeted that you should wait and watch, because Bank Nifty was not showing similar strength in the morning. So Bank Nifty was still within its own range, and it was within the day high range when Nifty was already breaking out of the previous day high range, and also which happened to be the day high. You could see here that this was the day high, which also happened to be the PDH. But Bank Nifty was showing weakness at that time. It wasn't really showing as much bullishness as Nifty was showing, but Nifty was clearly bullish. And I also said that Nifty had acted as expected and it had reached the next resistance. So I tweeted when Nifty actually came and met the R2 pivot here. And that time also I had said that Bank Nifty was still struggling, and it doesn't matter how much strength you see in one of the indices, the other is struggling, then it's best that you don't create a new position in the market, is what I had tweeted. Now, how did I know all of this? I could see that through price action, and you will also be able to read all this once you start learning price action and get experienced in this. Okay, so it was very much expected given the price action that Nifty would reach at least R2, but I was not really confident about Bank Nifty at that time. Okay, and later I had tweeted when actually 20 EMA was coming close by, and rather price had left 20 EMA far behind. I had said that a mean reversion towards the 20 EMA was expected, and there was a weekly pivot as well as R2 very close by. So here you could see that there was a weekly pivot at this point and R2 was at this point. So when Nifty took resistance here and went down after breaking both the weekly pivot and the R2, it had actually come down and taken support at the weekly pivot. So here I was expecting there to be some sort of halt to the price, which actually you can see in this area right here, that price had halted for a while, but that was still not very close to the 20 EMA, and 20 EMA was yet to reach that point at that time. So this was 20 EMA, and as you can see 20 EMA was pretty far away from the price even at that time. So a pullback to the 20 EMA was expected surely. And whenever you see a trending day like this, or whenever you see a trending 20 EMA, that is an upward sloping 20 EMA. Okay, so 20 EMA will show an upward sign or an upward slope. So you can see the entire day the 20 EMA has been sloping upwards. It hasn't really dipped. On such days, you can see that it acts as a very beautiful dynamic support to price. So whenever you see that there is any reversion, any reversal sign at the 20 EMA, then you can take that as a chance to go long, because being reversal or breakout traders, you really don't know how to get into such rallies, and usually you should let such rallies go. You should not suffer from FOMO. It's best that you let such rallies go. It doesn't matter, because you make enough money out of the markets trading only reversals, and if you're a breakout trader, then breakouts also, or if you're a purely breakout trader, then trading only breakouts, whatever your style is. But on such days, if you feel the heat of staying out and you know that the market is trending and on such days you can make some money, then you should look for reversal signs close to 20 EMA. Now here a red candle was taken out by a green candle, but still that was very far away from the 20 EMA, as I just said. Okay, so going long here, your SL would be below this here, below the weekly pivot, which happens to be here. And if your SL is here, then it's still above the 20 EMA. So it makes no sense going into a long position at that point. And here at this point, you are not very sure that it's a trending day yet. So as Nifty had opened with this bullish candle, it was a strong bullish candle. You can see the wick on the bottom also, and then it actually took a resistance at this point here, and two things could have happened from there. After it had reversed from here, it could have come to the base of the green candle here, and then it could have taken support along with the 20 MA with the day's low, maybe somewhere around here, and then you could have maybe seen a pin bar. Then here would be your chance to go long. Or the second thing that could have happened is price could have gone up here and then broken down from here, and then if it would have taken the low out, then you could have traded for the CPR here. So you could have traded for the CPR support. You could have kept your stop loss somewhere above this area here. Your entry could have been here, and then you could have picked up your profit somewhere around the CPR. So that was also one way to trade today, but the price did not really reverse, and you could see bullishness because when you saw such kind of a reversal pattern right at the supply zone, then why was it the supply zone? Because price had crashed from here, right, yesterday. So that was the supply zone. Then here you see the pivot, the pin bar, but this pin bar is not really tradable. Why? Because you can see strong green candles before it. Now it can happen that price is pushed up to that level just to take a resistance at this level and then bring the price down from there. So that is why I always say that wait for the low of this particular candle to be taken out. Why do you want to wait for that low to be taken out, and why don't you want to trade at this point here? I know that this is like shorting at a premium, right, at a much higher price than shorting somewhere here, but the idea here is that you have a lot of buyers in this particular green candle, and if you have buyers, then you have stop losses here, so you can hunt those stop losses, and that is what big institutions do. So you should wait for big institutions to punch their own orders. And why do they create such kind of stop loss hunting here? Because they need liquidity. So this gives them liquidity, and whenever there is liquidity, you have more participation at that point, so the chances of their orders being filled are much higher, and so the price will either bounce from here or it will break this point and go down. And since it was a very narrow CPR in Nifty, it was indicative of a trending day anyway. So you should have looked for trending patterns today, and that is the very reason why I said that this exactly is not the place to go long. Of course, if you are a supply demand trader and you look at this as a particular breakout, then by all means you could have gone long here itself, because you see that the breakout was, the supply zone was broken, because this day PDH was the supply zone. But then you could see that Bank Nifty at that time was still within its own resistance area, because it had taken selling and it had come down, and the day high in Bank Nifty was still intact, and that is why this particular breakout might have failed. So you cannot really say or judge that when the market is live. So well, anyway, now when the price goes back and it comes back to the 20 MA, it is called mean reversion. So that is what I had talked about. What is mean reversion? Mean reversion means that whenever the price goes away from its average, okay, and it leaves the 20 MA far behind, then there is always going to be a rubber band effect. So because of the rubber band effect, the price is going to come back to the 20 EMA. It's going to get pulled back to the 20 EMA when the price has gone far away from it. So you can see that price is far away from the 20 EMA right here, and so it is pulled back to the 20 EMA. So at this point, where is the safest place to trade? Whenever you see some sort of a reversal pattern. Now what is this pattern? It is not exactly like that, it doesn't look exactly like that, but it is a piercing line, right? This is a piercing line pattern. Let me just zoom it up for you. Yes, this particular green candle does have a wick on the top, but you can see that the close of this candle is 16104.80 and the open of this candle is 16104.35. So this closed at 0.80 and this closed at 0.35. Now what happens in a piercing line? Usually the green candle will gap down and open, and this is what has happened, although a very small gap down. So this was the 0.8 minus 0.35. So that was the gap down that we saw. Okay, that was a very small gap down, but this price was pushed below sharply by the sellers. There was a prior small downtrend, and then this candle, the green candle, has taken out more than 50% of the red candle. So you can see here more than 50% of this candle has been taken out, and if you've seen my masterclass video, then you will know what that pattern is. So yes, this body is very small here, and then you can see that this is this kind of a something of this sort. This is a wick and a very narrow, a very short body and a very short wick on the top. Okay, so this is a pin bar basically when you add these two candlesticks. Okay, I'm talking about these two candlesticks here. And so that is why this was a reversal sign very close to, although not touching the 20 EMA. So this was one place for you to go long. You could see another pin bar here. This was another place to go long. But usually what I tend to do is I tend to want you to have some sort of a support below it. And why this was the best place to go long was because you also had this zone here from which previously Bank Nifty had taken some resistance and come down. So you can see that Bank Nifty had taken resistance here, it came down, then it went through it, and now this area would act as a support. And you could see that exactly at that area, Bank Nifty, or rather that area is acting as a support. So this is the area that is acting as a support. You can see these wicks here, isn't it? And since you could see that these were strong red candles, this was a strong red candle, this was a green candle but a bearish pin bar, right? And even after these candles, the price had not let, the buyers had not let the price fall further from here, but instead take support at the weekly pivot and bounce again, forming these big green candles. So because of that, when price came to that area, you knew that this was going to be an important support zone. Okay, so that is why the formation here is important. Formations anywhere on the chart are not important. You might get to see such formations many times on the charts, but why was this formation important? This formation was important because of these two candles here, because they had given resistance to price in this zone. And the 20 EMA was also in the vicinity, so you could have kept your stop loss somewhere below here, but then going long here was very big. I had measured that. I will show you this. Let's go and take a virtual long position here. Your target should be the next pivot, which is the R3. Okay, and your best place, now think about it and tell me where your best place to keep your SL is. Is your best place to keep your SL somewhere here below that formation, or is it below this pivot? Where exactly is your best place to keep your SL? See, your best place to keep your SL is below the weekly pivot here. Why? Because you can see that this formation has come up to the weekly pivot and then it has taken support and shot off from here, right? So this becomes the swing low here. So this is one, and then this is the swing, then this goes high, then this is another swing and it goes high. So you can see that these are higher highs and higher lows. Okay, so the best place to keep your SL would be below the weekly pivot, that is your SL. Okay, so considering that as your SL, then if you keep your SL here, then you can see here that it's probably around 55 points SL, and your risk reward is around 1.5, 1 is to 1.55. You can see this here, it shows 1 is to 1.55. So to make it 1 is to 2 at least, you have to pull it down here, right? So this should ideally be your entry line, but then price never retraced back so low. You can see that price has never really come down so low to that area after this price action pattern had formed. So you can see that price has not touched this area, this entry line, and that's why really there was no entry, at least for me today. I mean, if you trade for 1 is to 1.5, then by all means you could have traded on this particular pattern today. But mind you, this pattern is applicable only on trending days. Okay, so if you are a trader who trades on the 20 EMA, then by all means you should go ahead and trade the 20 EMA, but you should trade only the 20 EMA and trade on the 20 EMA only when you see such kind of bullishness in the market. Okay, when you see that the market is, or Nifty or Bank Nifty are really in a mode where they are going and making higher and higher lows and higher highs, and they definitely look to be strongly bullish, or it could be strongly bearish also. It doesn't have to be just bullish. It could be a sloping 20 EMA to the downside this way also. So you could trade on that one also. But if you're trading on that pattern, then stick to the 20 EMA only and don't keep hopping strategies. It makes no sense. So stick to the 20 EMA strategy. That is what is going to give you success. Whatever strategy you use, If you're using the 20 EMA strategy, stick to that strategy. Even if it works 50% of the times, if you win to 2% here and 50% of the times you lose 1% here, then at the end of the month you're going to be a profitable trader. So you're going to have profits at the end of the month. Okay, so understand that whatever strategy you use, you stick to that strategy. And if you are a reversal trader, then forget about such days. Let such days go. You should not feel bad about it. Don't suffer from FOMO. Don't suffer from the fear of missing out. This emotion has no place in the market. Okay, and if you're a breakout trader, then definitely this was your place to go long. If you are watching both Nifty and Bank Nifty, then this was not a very high probability trade, but considering the fact that if you always watch only one index, then this was your place to go long. Because other times when your SL is hit, then at such times at least you get an entry into it, right? If your SL is hit, it's hit, fine. But then if you're not watching the other index, then don't watch it. Consistently watch only one index. So trade only one instrument. It could be either Bank Nifty or Nifty. And if you're trading both instruments, then ensure that you are creating a group of both of those, and then you're trading only when you see similar patterns in both Nifty and Bank Nifty. Okay, I think enough of explanation here. Let's go ahead and mark levels now. These levels don't make any sense now. We will delete them. It is very difficult to mark levels on such days because price just keeps rallying in one direction. So, here you saw that the price had actually taken resistance and fallen, and again it has taken resistance and fallen. So this area where price has taken resistance on the 16th of May and fallen sharply, and here a slight bit of fall here, and then it has been broken, then you should ideally keep these levels intact. Why? Because such levels will act as strong supports in the days to come. So let this level be, and then you could see going forward what sort of price action you see later at that level when the price comes back to those levels. Again, you see that there is a sharp fall in price here. Okay, that is the 13th of May. Now that 13th of May, you can see that this area, the price has actually taken resistance and fallen, right? From this area, that's the PDH of yesterday. So we'll just mark this area out like this. And on the 16th of May, price did not reach that area. On the 17th of May, price has touched that area, then taken support around that area and then shot off, right? So this area has acted as a support. So just to be sure and safe, you can mark that area. But again, you can see that this is a very wide CPR. And you can see this area here. It's a very wide CPR. 110 points. It's a very, very wide CPR. So if the level is so close to the CPR, don't mark it. It doesn't matter. Let's go to the higher time frame here. Let's go to the 15-minute time frame. We will see what sort of levels we can mark in this area. See, there is one level that I can see right away is this area or this level where price has taken resistance here, fallen off, then gone up again and taken support here. But again, it is within the CPR. So no point marking that area or that zone now. We do have a very narrow virgin CPR coming from today's price action. It's fine if you don't mark it because it is very narrow, and virgin CPRs really don't work when they are very narrow. They're really not so important. So if you're going to if you're a trader who really trades on virgin CPRs, then you can go ahead and mark that area also. For a moment, we'll go to the daily time frame and we will see what sort of candlestick do we see here. So it's a good sign. We see a very good healthy green candlestick here at this point, and we can see that 15750 has acted as a strong support. This candle has made a doji. That was yesterday's price action. So 16th May made a doji, and that doji has come after two strong red candles. Okay, so this you can see here, Nifty has been falling consistently here, and you can see that the fall has been going right since, what is the date here, 5th of April. So there's been a consistent fall in Nifty. There was a slight pullback, then a fall, slight pullback, then a continuous fall. And you can see here that at this point Nifty has taken some support and then made a doji candle here and then shot off. Okay, so this entire formation of this sort looks something like a morning star, but for a morning star there should be a doji down here. Okay, there should be a doji somewhere down here. Okay, so this looks like one, but it is exactly not one, but definitely it is an inside bar. So what it is not exactly is a morning star, but it is exactly an evening star pattern, an inside bar formation here, which has been broken very comfortably by a strong green candle. So there was compression here, it got compressed and then it exploded today. So this explosion is a good sign. It remains to be seen now how this particular level acts, and let's see what that particular level is. That is the high of this particular red candle, which is 16,080. So that level has to hold now when price, if it corrects to that level, and if it corrects to that level right here, then we will have to see what kind of reaction we get to see at this point. And again, if we see that there is a pin bar formation, then price might continue its journey upwards. But then we have important resistances all the way up. We also have a gap here, which is quite close now. Okay, so that gap also might act as an important resistance, but we will have to see. We also have this point as an important resistance here. We have all these levels marked at this point, so you don't need to worry about the levels at all. But this does look to me to be a small swing low. Now whether it is a pullback or in a long-term short or a bearish market right now, or whether it is a proper reversal, that only time can tell. We cannot really predict that at this point. Alright, so that was the analysis of Nifty for you. Now let's go ahead and check Bank Nifty. Okay, this right here is Bank Nifty, and let's check the rally in Bank Nifty today. From day low to day high, it's around 680 points, so not as strong as Nifty. So I had already said in the morning that Bank Nifty really does not look very strong. But okay, now let's see what Bank Nifty has done today. See, Bank Nifty opened with a green candle and it had a long wick on the bottom, but it also had this long wick on the top. Okay, so this candle did not really make much sense to me. And although it had broken the day high in the very first 5-minute candle itself, I really did not think that it had too much strength. And you can see that R1 and day high, that is the PDH, were a little bit too far away from each other. So I have told you that when the R1, or rather the day high, is the PDH, that is the previous day high, is broken, then the R1 is still there to act as a resistance. So don't think that if the PDH is broken, then this pivot is not going to work. The R1 is a strong pivot and they usually will act as twins. So if one releases price, the other will tend to catch it. And that is something that we saw today. You could see these wicks on the top, and I was really not happy looking at these wicks. And that's why I said in the Nifty analysis and even in my tweet that these wicks are something that look problematic to me. And it really did not show much strength right since the first candle here. And you could see how price actually went up, then took resistance, then it was kind of going in a sideways motion right at this up till this point, and a big red candle blows right through the PDH, right? And then it comes down and then it kind of takes out the low of the first candle also. You could see that this candle here, it took out the low of the first candle. The time of the candle was 10 a.m. That was a 10 a.m. candle, which was a strong bearish candle. But then it got support at this point and then it reversed again. But then through all this time, the 10 a.m. candle was the one here that had broken down from the day's low, and that was the candle that had broken out from the PDH in Nifty. So that is the reason why I had said that Bank Nifty does not look strong, and right up till the point that Bank Nifty broke this particular level, it never really looked strong. Even in this area, you can see how Bank Nifty kept going sideways, and it was only because of Nifty that Bank Nifty was dragged today. Otherwise, Bank Nifty would have dragged Nifty down had Nifty not had much strength today. So it took a lot of strength from Nifty to drag Bank Nifty along with it. But still, as you can see, it has not really gone up as many points as it should have, or it was expected to go. So you could see that there was a pin bar formation here which took support around this area. Once this level was broken as a resistance, it acted as a strong support. That is why I always say in technical analysis, you should know that that level which is broken as a resistance will act as support, and a support will become resistance when it's broken. So you could see the resistance was coming from this candle, which was the 13th May 1:35 p.m. candle. You could see the massive fall that was coming from there, and we had marked that level already, and that level was broken today. You could see that Bank Nifty was taking resistance at this point here initially, and after this resistance, it actually went in and broke the resistance with this candle, which was the 11:20 a.m. candle. And then this was the candle which was the 1:25 p.m. candle, made a nice pin bar there. And if you were active with the 20 EMA, if you do plot it, then you can see that that candle had actually broken the 20 EMA and gone below it. So even here you can see that Bank Nifty had broken 20 EMA twice in the day when Nifty barely even touched 20 EMA today. So you could see that around this area also Bank Nifty had broken 20 EMA. It did take support, dynamic support of the 20 EMA later on, but it really did not look very strong to me. So I don't really think that Bank Nifty is really strong at this point. Let's go ahead and see Bank Nifty on the daily chart also. Yes, you can see that Bank Nifty has made two back-to-back strong green candles here, and it has taken out the resistance of the 13th May candle, but now it is at an important resistance of the 12th May candle. So that day high has not been broken yet. We need to check how it happens. Then again, we have a strong resistance point with the gap here, which is still persistent up here. It has not been broken. Okay, so let's go to the 15-minute time frame. Let's observe levels at this point. Let's see what we have now as far as levels go. See, now Bank Nifty also had a fairly narrow to average CPR today. It did not have as tight a CPR as we have seen in Nifty, but it was an okay, acceptably narrow CPR. And we will first extend all these virgin CPRs forward. We'll extend the gap forward and the virgin CPR coming from the 12th of May also. So just extend these virgin CPRs. You can see now that this level has acted as a support once it's broken, but it is very close to the next day's CPR, so we can delete that area. And now we have an important resistance at this point from where price had fallen. Now how much had it fallen? Let's see on the 11th of May how much had it fallen. It had fallen in totality from the 11th to the 12th, or 13th rather, I would say. It is around 1300 points. So it's a big fall where Bank Nifty has gone and touched again. And again you also see that we have a strong support. We had a strong support here which was broken by this candle. The support was the 11th May support. Then on 12th of May it was broken, and then the 12th of May 9:15 AM candle to the 13th of May low is around 1300 points. Then we see a bounce from that exact area right up to that point again. So Bank Nifty has kind of recovered from this particular fall in nearly a V shape. So you can see how it is a V-shaped recovery in 4 days. So it all needs to be seen now what sort of price action we see tomorrow, because we have a 12th May virgin CPR right on top of today's PDH. So we will have to keep an eye out on that level. Okay, so one important level that I see here which has been broken with a lot of resistance is this level, but this level really stands exactly within the CPR. So it's best that we don't mark that level at this point in time. And we do have a virgin CPR coming from today's price action. We don't have a gap anywhere to be drawn, a new gap, but we will mark this virgin CPR since it's a average sized or a narrow to average size virgin CPR. So it's average and a little wider than what we saw in Nifty. So I guess that's good enough for today's price action analysis, guys. If you liked it, definitely let me know in the comments. Please do leave your comments. It really encourages me and keeps my motivation high to keep this channel going. And please share my videos. I would really like to have more views. So with your help, I will be able to share my channel with more and more newcomers. I really think that I am working hard to make all these videos so that everyone can benefit from it. For all my fellow traders who are new to the stock market, I can definitely help them to grow their accounts through this channel. Thank you guys for watching. If you've liked it, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I post a new video. I'll see you in the next one. Bye bye.